Hello and welcome to your Daily Game Sizzle with me, Jon Jordan. Today we're looking at Zynga's Q3 financials, so that's the period from the 1st of July 2017 to the 31st of September 2017. What we've got here, to put that into some context, is all of Zynga's financials, at least in terms of its revenue, bookings and income since 2011. So famously with Zynga, it IPO'd in late 2011. We can see back then sales were going up, that you always want to IPO when your sales are increasing. And it was profitable generally, we could say back then. Obviously then Zynga was much more, was pretty much 100% on Facebook, a Facebook gaming platform. Just out of interest, you have this massive loss when it IPO'd because that was all to do with stock options. So we can kind of, that was a gap loss, but when we look at the underlying kind of performance of the company, that's perhaps not something to focus too much on. But what we can see is basically since it IPO'd, sales did increase for a little bit into 2012, but since then it's been a, we can't even really say a roller coaster ride. Since then it's been a kind of a free fall, at least till 2014. Then it kind of, in terms of the green bar, which is GAAP revenue, I should point that out. So green bar is GAAP revenue, which is the accounting standard. The yellow line is bookings, which is basically what revenue the company books in a quarter. So there's no deferred revenue on that. The difference between GAAP revenue and bookings is the deferred revenue. So for a lot of these games, they're counted as services. So if someone spends $100 in the game, that may be accounted over a longer period than just the quarter that the company is announcing. So that's the difference between those two. Doesn't really matter. So we're kind of, in terms of kind of Zynga's kind of underlying problems, hasn't really been so much about revenue, although it's gone up and down. We can see pretty much from 2015 it's been around about the 200 million mark in terms of quarterly revenue. What has really been the issue has been the below the line red column. That's losses. So we can see from 2013 onwards, you know, heavy losses in 2014, losses in 2015. In fact, Zynga hasn't had a profitable year in terms of a 12-month period, financial year, since it floated. That is going to change, however. That's the good news when it comes to the Q3 financials. So if we look towards the right-hand side of the graph, we can just see there on the Q3 that the GAAP revenue was just under $225 million. The bookings were $214 million. But we can see more positively the red column is above the line, and that's actually the first time that Zynga has had 2 consecutive profitable quarters as a floated company. So we can see, if we look all the way back, it has been profitable in quarters before, but it's never put 2 consecutive quarters together. So that's the good news in terms of Zynga's Q3s. So this graph, we're just zooming in a bit more detail on the period 2015 to 2017. You can see here what I've done is I have the estimated numbers for the Q4 period. So Zynga has given guidance, as most public companies do, about where it thinks its sales are going to end up. Obviously, the sales for the Q4 period are the sales from the 1st of October to the 31st of December. So we're already halfway through that anyway. So companies normally have a good idea of kind of their trajectory. So what we can see is actually, I guess the headline thing is Zynga expects to be profitable again. This is very important because we've seen it hasn't been very profitable in a sustained manner before. So assuming everything kind of pans out as Zynga expects, 2017 will be its first profitable year ever, and it will be the first time it's had 3 consecutive quarters of profit. So that's good. That's what people want to see in companies. Companies are gaining kind of cost control, gaining control of their own destiny. If you're losing money all the time, then that's an unstable situation. Zynga used to be like that. Zynga is now stable in the sense it's generating profit. Then it can decide what to do with that profit, invest in new products, invest in current products, or as we're seeing, do some acquisitions. I guess the one thing to point out, however, is that the guidance for Q4 is that revenue and bookings will be down slightly. Now, obviously, guidance can be beaten. So often companies give guidance that's a little bit conservative, so they can say we beat guidance, we did better than we thought we were going to do. So the the revenue and bookings may be a bit higher than we think. But basically, we're going to see bookings about the same, and I don't think Zynga expects that to go much higher. Part of the reason that this has happened is in the Q3 figure there were some kind of accounting processes that Zynga had to do. It shut down one of its, or is in the process of shutting down one of its tech licensing companies that was very small, but it shut it down during that Q3 period, and that meant the revenue was all booked in that period. So in a sense, the Q3 period looks better than it kind of the underlying business is, just because these one-off kind of revenue issues went in. So this isn't a kind of a long-term issue that Zynga's sales are going to go down now. Just to point out, though, that's why that figure looks like the Q3 looks much higher than the Q4. Q4 may go up there, but Q3 was artificially high. And the reason, and it's kind of interesting, I guess, and we say in the title of this graph, is Zynga had a new management team, so a new CEO, Frank Gabo, who took over in March 2016, and also a new CFO, Gerard Griffin, took over in mid-2016. And along with other changes to Zynga, notably the launch of the CSR Racing 2, which is now its second biggest game, also happened in mid-2016, should point that out. But really, mid-2016 is the point at which we see Zynga's revenues start to change. So at that point, they start to grow pretty much quarter on quarter, certainly year on year. We also see, the kind of profitability that lags a little bit, but by 2016 was a loss-making year, but we can kind of start to see those losses kind of declining, and certainly 2017 we're kind of seeing the payoff of what has been a focus on live operations. So Zynga hasn't released any new games in particular, although we'll come on to one that has just launched. But more, it's been focusing much more on the games it has and the players it has in those games, and focusing on keeping them coming back to the game, spending more in the game, particularly for games like Zynga Poker, which has been now out for 10 years on Facebook and mobile. And it's seen very strong year-on-year increases in revenue from those games. Obviously, CSR Racing is coming again from mid-2016. That is now running at about a $100 million year franchise. So that's obviously great to have in as well. So talking more about new launches, Zynga has just launched a new game. It's within the Words with Friends kind of franchise. It's called Words with Friends 2. So there was Words with Friends kind of classic, and then new Words with Friends, and now Words with Friends 2. They're all basically the same game. You're doing the same thing socially, playing kind of a Scrabble type game. This is an interesting graphic. Comes from Verto Analytics, and they do behavioural kind of analysis. They have people having apps installed on their phone that can track what they're doing, just in the US. So this is, as it says, competitive landscape of quiz and word games. Now, Words with Friends is as we can see, a massive franchise. It's by far and away the biggest word game in the US. More than 4 times bigger than their competitors. But interestingly, it's been ad funded, so all the revenue that Zynga generates from that game is from advertising. Now, you can generate good money from advertising, but it's very much about scale there. It's very much about having vast numbers of people, and it's very hard, obviously, to grow that scale. So the reason that Zynga's come up with Words with Friends 2 is, one, it's updated the game. It looks nice. It's got some new modes in it. And part of the reason it's done that is, for the first time, it has a strong in-app purchase monetization option. Now, clearly, people play Words with Friends in a certain way. They're not suddenly all going to go, oh, I really wanted in-app purchases before, we never had them, now I'm going to spend loads of money in the games. That's clearly not how it's going to work. I mean, the one thing is people are going to continue playing the Words with Friends version that they have. They're not immediately going to migrate. All these, say, 14 million people are not immediately going to download the new app. They're going to play an experience they like, and probably they will, as marketing comes in, be cross-promoted. They will check out the new game, version of the game in that sense, and see if they want to play it. Obviously, all the versions of the game work together, so it doesn't matter what version of the game your friends are playing, you'll play the same game. But at least this Words with Friends 2 does give Zynga the option of monetizing what could be quite a large player base better. And this is clearly important. Advertising at the moment has been pretty weak in terms of the revenue it's been generating for Zynga over 2017. So having this big launch, or a launch of potentially a big game, is important for 2018, The other interesting thing that Zynga has done is it spent $100 million cash buying some mobile card games from Turkish company Peak Games. So again, that kind of fits well within its kind of card portfolio with all the Zynga poker type games. So Zynga now says it is the biggest publisher of mobile card games in the world. So what all companies like to do is they like to have very strong positioning in what they feel are key genres. Now, if Zynga's number one, in cards, it can obviously cross-promote its card games. They will have different types of usage, different types of monetization. Zynga Poker is obviously much stronger on in-app purchases. As we say, some of the other card games are more about ad funding, but you can start to move players around, start to generate kind of good synergies. Now, this is not going to double Zynga's revenue in a quarter or even half a year, but you're going to start to see kind of increasing growth coming from these kind of moves. And that's why I think with the underlying trends we've seen already in 2017 and potentially with some of these synergies and some of these acquisitions coming to the fore in 2018, 2018 does look at the moment pretty solid for Zynga. Obviously, we don't want to get too far. We're quite a long way from the end of 2018, so we don't want to kind of say it's going to be a brilliant year for Zynga. Things can happen, events and all that kind of stuff. But Zynga does have some other games to be launched that it's not talking about yet. So all in all, 2018 seems to be shaping up quite well. So that's the message from today. Thanks for watching the video. So we like to do these deep dives into financials of games companies. So if that's your thing, don't forget to subscribe. But thanks for watching the video and hope to see you again soon.